What's up, everybody? If you've been wondering what in the world is going on in the Miami-Dade real estate market, then this is the video for you. I'm going to be breaking it all down specifically in the non-luxury single-family home range, which is all single-family homes that are $1.5 million or less. So definitely stick around for the full video because it's packed full of information. Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent. And this video is, one that I had to make because there is just so much craziness happening in the market right now. And as a real estate professional, my job is to educate you as the public. Well, at least one of my jobs. And that's what this video is about today, guys. I'm going to be breaking down all the data as far as, number of sales, inventory, prices, everything that you need to know in order to make the best decision for you and your family. So if that sounds good to you, stick around, check it out. If you like what you see, hit the like button, share this video with anyone you know who might be interested to learn a little bit more about what's happening in Miami real estate. So we're going to jump right into the data today, guys. This is coming to us directly from the MLS. So this data is, better than what you find on realtor.com or any other sites where you have to wait, over a month to get the data. This is coming direct from the MLS, the Southeast Florida MLS to be specific. So what we can see here, we're looking at number of sales versus closed price to original price ratio first. And what we see is that both the number of sales and the closed price to original price ratio softened for non-luxury single family homes in the Miami-Dade area in July, okay? So single family homes came down to 812, down from 914 in June, which is an 11.2% decrease. This is not what we typically see in a summer selling market, right? Normally the summer is the hot time of the year when most people are, moving, right? And although we haven't seen that typical selling activity in the post-pandemic timeline, I think eventually once inventory kind of levels out and we start to get back to more of like a normal real estate market, we will get back into more traditional real estate cyclical nature where summer is like a, has the most sales and so on and so forth. But, as you can see in the green line here, we're seeing like a pretty decent downtrend versus, other summer selling seasons where we didn't see that. I mean, July 2020 comparatively was a big difference, right? But even in 2019, we saw less sales happening in the summertime, and it's been a trend over the last 4 years or so here. So the sales are also down year over year from last July's 937 sales over here, which is a 13.3% decrease. Okay, so compared to the peak craziness of the pandemic Zoom rush, as we call it, or as I call it, I'm sure I think there's other people who call it the Zoom rush, because that's kind of what it was, where we had actually back in that July 2020 that I brought up, we had 1,341 sales, okay? So that's a decrease of 39.4%, which honestly paints a pretty bleak picture due to the low inventory, right? If we had more inventory, then there would be more sales, right? Of course, interest rates plays a big role in this picture as well, but part of it is that people aren't just necessarily going to buy a house if they can't find what they're looking for, right? Now, closed price to original price ratio, that's our blue line here that's looking all crazy. And this is the average difference put into a percentage of what a house was listed for versus what it ultimately sold for, okay? So this measure came in at 97.7% in July, which was down 0.2% from 97.9% in June. So it's not a super statistically significant difference, but it does lend itself to this overall narrative of a softer summer market where sellers aren't automatically getting what they're asking for, and certainly not on average getting over the asking price like back in our Zoom rush times, okay? So even last year, you can see that July 2022 was off the charts. It was actually over 100% closed price to original price ratio, okay? So that's kind of crazy. Let's move it on to the next chart here. And much to my and my buyer clients' demise, active inventory or supply and new listings both declined from June to July, which is definitely a huge factor in the softening data regarding the number of sales, since, like I said, people are less inclined to buy a home if they can't find a home that they like, right? So active supply from June to July, hey, that rhymed, declined from 67 units, which we're looking at the green line here, from 2,558 units to 2,491 for a 2.6% decrease, okay? Now, year over year is even worse, and that would be like back over here. You can see we're significantly lower than we were back over there, and we saw from right here in July, we had 3,460 units of inventory, which is already very low historically when you look at, like, you know, the pre-Zoom rush, as I've been calling it now. You know, that's already historically very low, and then it got even lower, okay? So the difference between that and the 2,491 of this past July is 969 units, okay? Or 28%. That's the year-over-year difference. So not fun for buyers, but almost single-handedly propping up values for sellers for sure, okay? So, you know, you got low inventory, a lot of demand, very little supply. Prices tend to do one thing, and that is go to the moon, all right? If only my stock portfolio would follow that logic. Anyways, so new listings is our blue line here, and new listings were honestly not much help in this department, being that they are the wellspring for the total supply, right? The more new listings that we have, the more chances that we have for our total supply to sort of increase, right? Now, even though new listings only decreased 0.25% from June to July right here, it almost looks flat, honestly, you know, from 1,177 to 1,174, the year over year difference is actually down 25.1% from 1,567 units last July to, again, this July's, 1,174. So it's kind of hard to put a positive spin on all of this, but if I had to try, I'd say that at least the decline in new listings wasn't as big year over year as the active listing decline year over year. So maybe there's a light at the end of the tunnel that new listings can, only go so low. There's always going to be a certain minimum of people putting their houses on the market, hopefully. But that's honestly still a little bit of a stretch of an argument, to be honest. And it truly leaves one wondering, how low can it go? So let's go to the next graph here as I try not to cry. Now, the graph that never trends downward is median sale price, as you can see in the green line here. And we're also going to be looking at average days on market, which is our blue line there. But as you can see by our median sale price, we're continually setting all-time median sale price records for non-luxury single-family homes in Miami-Dade. So this July, we saw that median sale price hit $596,000, okay, up $578,500 from June to July, okay? So that's a month-over-month staggering increase of 3%. Again, in just 1 month, median sale prices went up 3%, okay? Which used to be an average yearly rate of appreciation for many real estate markets, and year over year is even more impressive at 12.5% compared to over here, which was an increase from $530,000 last July, again, to the $596,000 this past July. So check this out. In the last 3 years since July 2020, Miami-Dade homeowners, okay, looking at over here in July 2020, Miami-Dade homeowners have had their properties increase in value by 52.4% from $391,000 in July of 2020. So that's a wild statistic, 52.4%. But remember, for all the people that are on the fence saying they're going to wait for the market to crash, just because we want the market to crash and we think that the number doesn't make sense and that it's not sustainable, or, it has to crash because, whatever, the chicken crossed the road, it doesn't mean that we're going to see a crash, okay? None of those things are demonstrable evidence that a crash or honestly even a correction are impending. So again, I've said in many videos, time in the market beats timing the market every single time, okay? Especially in Miami. Trust me, trust me, trust me. Get your foot in the door ASAP. Historically speaking, anyone who has gotten their foot in the door in Miami is not regretting it now when it comes to appreciation of value of their property. So looking at our blue line here, average days on market, we see that they've actually decreased from 59 to 51 from June to July for a 13.6% reduction. So even though there are less sales and higher prices, homes are sitting on the market for less time, okay? And you can see the speed of the market has been picking up since February of this year, right around here. And year over year, we are actually seeing that days on the market has increased though, okay? So look how much quicker the market was back here. It increased from 32 to now 51, right? Which is a 59.3% increase. So things aren't moving nearly as fast as they were a year ago, which makes sense when you consider that the closed price to original price ratio last year was over 100%, okay? But it is still a pretty fast market, especially compared to our pre-Zoom era, the pre-pandemic era. So last but not least, let's take a look at months of inventory, which is how long it would take to sell the existing supply of inventory if no new listings came on the market, okay? So we saw a very slight uptick here from June to July, but we are still at 3 months of inventory, which is a very strong seller's market for single family homes in Miami-Dade in the non-luxury range. So this is emphasized by the fact that last July, we were at 4 months of inventory over here, okay? And, even though the days on market were much less, of course, because there was considerably more inventory at the time, okay? So that's why that works out. There was more inventory, days on market were less, so you would think, hey, it would take less time to sell everything, but there was so much more inventory compared to where there's at now that we're actually at less days on, less months of inventory now than we were last year. So, what does this mean if you're a buyer, a seller, an investor? If you're a buyer in this market in Miami-Dade, you gotta get your foot in the door. Like I said earlier, time in the market beats timing the market. Make a sacrifice if you have to. Maybe you wanted to buy a single family home, but all you can afford now is a condo. Well, guess what? Buy a condo. Start building that equity, and then you can rent out that property, use that income to help you qualify for a single family home a year, maybe 2 years down the line after you've had more time to save up money. Figure out a way to purchase real estate ASAP, okay? And I'm not just saying that because I'm a realtor. It doesn't matter if you use me as your realtor or any other realtor in the market, even though I think you should use me because I'm the best realtor in the market. But even if you don't, I'm saying this because I'm here to help you as the general public, provide insight, knowledge, advice, not financial advice because I'm not a financial advisor, but general real estate advice because I am a real estate expert. Getting your foot in the door now is going to give you that opportunity to start building equity, okay? America runs on debt and equity. If you can't get debt, then you can't do anything in America. If you don't have equity, then you can't buy anything in America, okay? Now, obviously, I'm making broad generalizations. You can maybe go buy groceries and things like that, right? But without building equity, how are you ever going to build a rental portfolio? How are you going to, be able to invest in markets to be able to fund a retirement fund for yourself or your kids' college education? You're not going to be doing it on just your yearly salary and saving up a little bit of money and shoving it into your sock drawer. You have to buy assets if you want to build substantial equity in this country, okay? So I want to see you guys succeed. That's why I bring you this knowledge and information, because I want to help people out. So get your foot in the door. Just trust me. If you have any questions about how you can make that happen, of course you can reach out to me. All my contact info is in the description down below. If you're a seller in this market, the good news is, like you saw from median sale price, we're near all-time highs. So it's we are at all-time highs rather. So it's a great time to sell if you can make it happen, right? Something like 90-something% of homeowners have an interest rate that is below 6%. And, we're at about 7% interest rate right now. So unless you're downsizing, for a lot of people, it doesn't quite make sense unless you have to move. If you do have to move and you do have to sell for whatever reason, the most important thing is to price your property correctly, okay? Pricing it correctly is going to open up the potential for creating a bidding war and driving the price up higher. Just because you list, like we saw with the closed price to original price ratio, just because you list higher than the market value doesn't mean that you're going to get it. You know, and in fact, that's going to scare away a lot of people because buyers have in their mentality right now that, oh, it's listed for X amount, that means I'm going to have to pay that amount, right? They don't realize, like I've been telling people that list prices right now are more like the yellow speed limit signs. They're kind of just a suggestion, and the market value is what really matters right now. So, but most buyers don't really realize that. So you have to understand as a seller that the way you're going to get more money actually for the purchase price of your property is not by listing it with some fanciful number. It's by listing it at the market value, which is going to create more eyes and more people visiting your property and more offers in your hand, okay? Then an agent like myself can use those offers to help, you know, create that bidding war and get that price up for you, okay? This is something I am excellent at. So if you have any questions about how that happens, again, all my contact info in the description down below. Now, if you're an investor in this market, you have to realize, Miami is not like, you know, Wichita, Kansas. Is that even in Kansas? I don't know. Miami is the hottest real estate market on planet Earth, okay? A deal in Miami is getting a property at market price, okay? You have to understand this as an investor in Miami. Now, that is not to say a deal is getting the property at list price, because again, the list prices are yellow speed limit signs. They're a suggestion. The market value is what matters. Now that's where somebody like myself comes in. I run a comparative market analysis. I say, hey, look, it's listed for 500, but the market value is actually 425. We make an offer for 425. You scoop it up, boom, you just got a smoking hot deal in the Miami market by getting that property for 425, okay? But you're not getting it for 350, okay? So hopefully this paints a picture for you guys. If you're an investor, you know, get ready to pay market value for properties. That's the Miami market. But the good side is you're gonna have substantial appreciation. Rent values here are very stable. So it's still an excellent market to invest in. And those are my thoughts on the Miami market, and more specifically, the single family homes in the non-luxury range. If you're interested in any other sectors of the market, definitely make sure that you subscribe, because I'm gonna be pumping those videos out, as I always do, right here on this channel. So hit subscribe, smash the like button, share this video with anyone you know who might be interested in this information. And, you know, Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate expert, and I'll see you guys on the next video. Peace.